What's happening, everybody? Neetson Mosery here, the traveling investor, and welcome to another session, live Q&A of the Traveling Investor Show. I'm Neetson Mosery, your host. And you know, we're born into our families and we're born into our society and we're born into our parents' financial reality. However, what most people don't understand is that just because we're born into a specific family or socioeconomic world, that doesn't mean that's where we have to end up. You know, being poor, being born poor isn't your fault. Dying poor is. And a majority of people live life by default. They accept the cards that they were dealt and offer no resistance to mediocrity. You know, I thought that my fate was to die poor. However, I thought that was written in stone, but I learned that it's up to me. And there's a great saying: if it is to be, it is up to me. So, you know, here on the Traveling Investor Show, we talk about how to live life on your terms and create the life, finances, relationships that you only dream of. So join me, Neetson Mosery, your host, every week on the live Traveling Investor Show, where we demystify the art of mastering your mind, body, and wallet so that you can be at every softball game, and so that you can go on vacation and tell your boss to go kiss your ass. This is the show where it happens, where you're going to learn how to do that. And I bring you guests upon guests that help us achieve massive success and learn how to master your mind, body, and wallet. And today I was going to have, she may still be on the show, but her name is Jillian Sidoti. And just to give you a little bit background on who she is, she may show up a little late. Jillian Sidoti is an attorney, speaker, entrepreneur. She's a mama. She's a former college professor, and she's forever focused on finding the best and least challenging path for entrepreneurs to find funding for their deals. Jillian has written equity and debt offerings for all kinds of industries, including real estate, biotech, film, software, alcoholic beverage, cannabis, and green technology. Jillian's client list includes Grant Cardone, Than Merrill of AE's Flip This House, Tarek El Moussa of Flip or Flop, David Gross, Bigger Pockets, Institute Biologics, and BioLife 4D, to name just a few. Jillian is the author of The Crowdfunding Myth, Debunking the Myths Surrounding Crowdfunding. As a public speaker, Jillian often offers fun and relatable content that leaves the audience with a deeper understanding of the legalities of and the psychology behind raising capital. Her signature talk, Private Money Rockstar, draws from Jillian's previous experience in the music industry with the intention of empowering the entrepreneur to be a money-raising rock star. Jillian is the founding partner of Crowdfunding Lawyers LLP, established in 2014, and Crowdfunding Lawyers LLP clients have gone on to raise over $4 billion in capital. Jillian has three amazing little boys, Tyler, Tommy, and Nicola, and an amazing husband, Derek. So that's who is going to be on the show this week. A lot of times people have last minute things. Oh, there she is. Oh, there she is. She's probably having a little technical difficulties. Hey, Jillian.
Yeah, I was. Yeah. I'm so sorry. Hi. I don't know why, but I can't get this on my computer, so unfortunately I'm on my phone, but here I am.
All right. Well, we got you as a bunch of lines going across, so that's fine. How are you?
I'm doing great. Thank you so much. Let me see if I can, I tried getting on my computer with this and it wouldn't work. So now I'm on my phone. So I apologize to everyone. I know how these things go. They go live and that's never great, you know. Just
no worries. No
worries. Going live. So, but thank you so much for having me. I appreciate it.
Yeah, absolutely. Thanks for being on. I know you're super busy. I just finished reading your bio and telling all of our listeners about you and what you do, and the different clients that you've had. Going from Grant Cardone to Than Merrill to all these huge organizations, and how you've helped so many people raise capital for different ventures and different opportunities on many different niches and different industries.
Yeah.
So let me ask you this. So is raising capital the same process and the same idea with different industries, or is there different for different industries, different ways of raising capital?
There, honestly, at the end of the day, everybody just wants to hear a story. And so in answer to your question, it's the same for everyone. People want to hear a story. I always like to use as an example something really perhaps nefarious. And I don't know what anybody believes or what their thoughts are, but if I told you could make 25% investment on your money, and you just clean up and you're going to do great, and that means nothing to you unless I give you some context to it. And then like, well, in porn, not be ready to invest. You might say, like that. So the answer is,
we're having some
all
technical
you need to focus
difficulties.
on.
Yeah, it's coming in very choppy. I'm sorry. Continue. So you got to focus on. We heard a little bit. We heard something about porn.
Of course, that's the only thing.
Are you pitching a porn project? Are we talking about that right now? I mean, is that where we're going? Is that where the industry is going? Let's talk porn. I love it.
No, at the end of the day, though, now I'm blushing, of course, right? Of course. So, no, at the end of the day, you have to tell a great story. You have to get your investors emotionally invested prior to them investing their money. You got to get them to invest time and emotion beforehand. Like, some of the best investments I've made were based on a problem I saw that needed to be solved. And the proprietor, the entrepreneur, the company that I was investing in was looking to solve that problem. One of my favorite examples is, those big, huge laundry jugs that you get your laundry. So those, technically speaking, are not recyclable, right? But this company I found that was looking for investors, can recycle those. They found a way to recycle those big, huge jugs. So it's solving a problem. I can see the money because I can see the problem that they're solving. So when you're talking to investors, no matter what you're doing, you want to talk about the problem you're solving. So I'll give you a real estate example. So for example, right now I'm dealing in a deal that's in student housing. I've never actually done a student housing deal before. I've had to learn about student housing doing this deal. I've done a lot of multifamily. And what I learned is that, there's a problem at the University of Florida in Tallahassee. And the problem is that they don't have enough housing. They've had record enrollment in the last year. The last year they had more enrollees than they ever have in their history. They don't have enough housing. Parents need to put their kids in safe housing. I am going to solve that problem by providing student housing at the University of Florida. And so I don't have to tell you what the returns are. You can figure it out from there.
Oh, absolutely. That's definitely a good story.
Yeah.
That's definitely a good story.
So that's exactly it. And at the end of the day, you got to find the good story.
Right. So, being that I've raised capital and you've helped me with some of my offerings as well, a lot of people out there, clients of mine and people always ask on social media, how do you raise money? What's that one phrase? What's that one word that you're going to tell people that's going to make them give you money? How do people raise 10, 20 million dollars? What's the secret sauce?
Yeah.
What's that secret sauce?
So are you asking me what the secret sauce is?
I am, yes, because our listeners are asking me, and I always defer to people who are smarter than me. So I'm deferring to you
And
now.
Nissan, you're pretty smart. I've seen some of your investor videos. You're a pretty smart guy. So for me, the secret sauce is there's a formula to this, and you never start with the returns. The number one way to turn me off is to tell me about the returns before you tell me anything else, because I'll tell you that tells the investors two things. It tells the investor that all they're concerned about is their own self-interest and greed. And I don't want that. I don't want you to think that about me, and I'm not going to invest with you if you think that's all that I care about. Oh, I'm freezing. That's number one. Number two is that you have to take them through a process. So for example, I'll give you an example with this property in Fort Lauderdale. Excuse me, it's in Tallahassee. This property in Tallahassee, when I pitch it to somebody, or when my team pitches it to somebody, the way they pitch it is they start with the environment that kids need, a safe place to live, that parents are very concerned about having their kids in a safe place to live. And that not only are they concerned about that environment, they want to send their kids to a university that cares about them and that has a lot of programs. And University of Florida fits all these bills. And Tallahassee is a growing city. And I haven't even gotten to the properties yet. I haven't told you a word about the properties. I'm taking you on an adventure. I'm bringing you into why this area, why this location, why this school, why this asset class. And then I can tell you about, here's the property and why we're going to do the property. Then I'm going to talk about what we're going to do. And then I'm going to talk about how we're going to do it. Too many people skip those steps and they go straight to returns of what's in it for the investors, as opposed to going through the why, the what, the how of everything.
It's, I equate that to, going into a bar and seeing an attractive male, female, whatever you're into at the bar, and walking up to them and going, okay, when are we getting married?
Exactly. That's exactly right.
Let's go have some sex right now. Let's go back to my place, right? They're going, who are you?
Oh my God. What a terrible way to get somebody into you.
Right? That's kind of the opposite that you
exactly. Right? Absolutely. So
it's more of a educational process of, like you said, stirring up the emotions of people and showing them the story behind what it is that you like. Because if the story is there, if the, for lack of a better example, but if the foreplay is awesome,
yes,
right, then the rest just comes naturally after that.
Absolutely. And not only that, you make a good point, because so many investors think, or so many entrepreneurs, I'm freezing again, sorry about that. So many entrepreneurs believe that what you need to do is you just get a deal and then you start advertising for investors. And really what you should be doing is, I don't care if you have a deal now, tomorrow, or the next day, you should be looking for investors now. You should be feeding them now. The whole point is that you want to give them something before you ask them for something. There's so many examples of this that I could give, but that's just the bottom line. If you learn something from this interview here, you should tag this interview. You should tag Neetson and say, oh my God, Neetson Mosery knows exactly what he's talking about when it comes to raising capital. I learned so much, or he knows so much about apartments. And that gets your crowd realizing that not only are you in that business, but you are constantly developing your knowledge of the business.
Mm-hmm. Right. That's a great concept, give to be able to get, right?
Correct. Exactly.
Right?
Give before you get. That's right.
That's the way to do. So what are some of the things that newbies getting involved in this industry, in real estate and syndication and, raising capital, what are some things that they can give, because when I was starting out and, I'm looking and, trying to give people some information or trying to look like the expert, I didn't have anything. I didn't know what to give. What could people give when they're just starting out so that they can get back from their network of people? And I hate calling people investors, because people think that a specific person is an investor, but
Mm.
anybody can become an investor, right?
Absolutely. Yeah, I mean, like I know some really big syndicators who sometimes just get tired of finding deals or find deals in locations that they don't want to be the KP or they don't want to be the GP, and they have cash to invest. They need the depreciation, whatever it is. I'm thinking of somebody very specifically who was having a hard time finding deals in her market, and so she considered investing in other people's deals. Now, this woman was extremely well, owned thousands of units, very, very experienced, and yet, and yet, she did not want she did not want to do her own deals. She wanted to find other people's deals. So she was looking at other people's deals. You never know who's watching you or what they're looking at. So every single time, if you're a multifamily investor, every single time you look at a multifamily deal, you should be doing a Facebook post. You should be doing a TikTok. You should be doing a YouTube video on analyzing that deal, and then talk about, why didn't you go into that deal? Why did you make an offer on that deal? What is that deal really worth? And you're educating the public, and you're building what I call a know, like, and trust curve. You want to travel up the know and like trust curve. It kind of goes like this, right? It's an upward kind of sloping thing. And you want to build that know, like, and trust curve. And the way you can do that is the more information you put out there, the more examples you give, the more experience. People love to see real life examples. That's why TikTok is so popular right now. So every time you do something in the multifamily industry, even if it is a failure, you should talk about it and talk about why it was a failure. Fail forward in front of people, because that is going to build your know, like, and trust curve.
Absolutely. That's great. That's great info. Yeah. Fail forward fast. I always, it's true though, right? People get into this industry, they get into any other business, and they're afraid of making a mistake. They're afraid of, oh, what happens if this doesn't work? What happens if that doesn't work? And they don't do anything for fear of failure.
Right.
We got to get over that fear and just move forward and just blaze a trail. Right.
Absolutely.
You have 3 boys. I have 2 girls. So anybody that's had kids or was a kid once, we know that we learn through failure.
Mm-hmm.
As a baby's born, they don't have control of their hands, and they're trying to put their thumb in their mouth and get in their eye. They stick it in their nose or in their ear or in the pudding, and then they flop it all over. But eventually they figure out where the thumb goes, where the finger goes, where this goes. But it's done through failing.
It absolutely is. And that is such a great point, because I had a terrible fear of failure. Absolutely awful. And then, some things happened where I realized, like, I'm actually learning from this. It's not so bad. Things are not so bad. And actually what really taught me that failing forward is really okay is my middle child would not do anything if he couldn't get it perfect.
Mm.
And it killed me to watch him doing that. It brought me to tears to watch him, like, not do something because he was afraid it wasn't going to be perfect. And I literally looked him in the eyes, held him by his little shoulders, kneeled down and said to him, perfection, progress, not perfection. Progress, not perfection. And that, I mean, gosh, that's what we have to look at when we're in the real estate industry. I started in the real estate industry in 2005. So you guys can all do the math on that one.
Okay. Right. Absolutely. Yeah, I tell my daughters as well. I tell them, look, you know what? Perfection is perfection. We can strive for perfection, but always know that 80% is good enough. Right?
Yeah.
We'll never we'll never hit perfection, but we want to strive for it. That's where we want to go. But if I'm getting 80% of the way, that's awesome.
That's way better than nothing, right? Mm-hmm. Like, I mean, the thing is, and I think that comes with a lot comes with age, but one of the things I do definitely wish I learned younger was to take reasonable risks. And by the way, guys, this doesn't mean you don't do analysis. We're talking about securities and we're talking about raising capital. It's a jungle out there. And the SEC is no joke. I've seen more when you look at who the SEC goes after, they don't go after the Merrill Lynch's. They don't go to the president of Merrill Lynch and charge them. They go after the Joe Schmoes who are, raising $900,000 or $1.5 million. The SEC's coffers and dockets are filled with cases like that. You are the low-hanging fruit. So you do need to have some level of perfection when it comes to complying with the law, but you do not need to be perfect when it comes to looking for deals, analyzing deals, and putting content out there that people can learn from, so you can build your know, like, and trust curve.
Right. Well, let's talk a little bit about that. That's awesome. So what are some of the do's and more so the don'ts of raising capital?
Mm-hmm. Okay, so a big don't is to guarantee anything. I still, to this day, even after 15, 16 years of being in this industry, I still see people guaranteeing results or promising returns that are just not possible. I saw a deal that had a ridiculous equity multiplier attached to it. If you're doing that to attract investors, that's the wrong way to be doing things. You may find that you're successful, but that is going to run out of steam. And the minute you don't produce on that equity multiple that you promised, that was so thin as it was, is the minute you're going to lose all of those loyal investors. So those are really the big things, is just making sure you're not keeping promises that you can't actually keep.
Right. Under promise and over deliver.
Correct. For sure.
Yeah, I always, whenever we look at a property and the numbers are like, oh wow, this is so awesome, these numbers are great, blah 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 blah. I'm like, okay, let's dial those down. Let's bring them back into reality. It's great that the property is going to throw off a 20% return, but that's not what we're going to offer our investors.
Yeah, that's exactly it. It's like it's great if that's possible and that's reasonable, but you got to really also think about, like, does an investor actually believe this? And if they don't actually believe this, that's a problem, right? If it's too good to be true, it probably is. So that's really something we want to be thinking about when we're looking at what we're offering our investors.
Absolutely. It reminds me this one story that I have. A good friend of mine, he's one of the first people that we met when we moved to Florida. And we're flipping houses together. And I said, hey, James, you're a teacher, right? He was the teacher of my kids for many years. And, teacher salary, 35, 40,000 maybe. So I said, listen, I said, you got a line of credit. Why don't we take that money? You can invest with me. We'll flip some houses and you'll make some money. In 2 or 3 flips, you'll make more than you made your entire year in your salary. So he did it. And we went and we did a house, and the returns were phenomenal. I told him we were going to make about 33% return on our money in 6 months.
Oh my gosh.
We sold the property in 4 months and we made 30% return.
Oh my gosh.
Great.
Oh my gosh.
Anybody would be like, dude, let's do it 10 times, right? But what did he come to me and say? He said, didn't you say 33? I said, yeah. But I said 33 in 6 months, but I gave it back to you in 4 months and it was 30%. He goes, yeah, but didn't you say 33?
Oh, lessons learned. Oh my God.
I learned from now on, I will drop that number down, because if I would have told him 25 and I gave him 26, 27, 30, I would have looked like,
you would have looked like a superstar. Absolutely.
Exactly. But because I told him 33 and I gave him 30, he kept asking, yeah, but didn't you say 33? I mean, he goes, 30 is great, but didn't you say 33? I said, 30 is great. I said, 30 is phenomenal in 4 months. I said, if you multiply that by 3, you're making 90% in 1 year on your money. If we do that 3 times, where else are you going to get that?
I mean, honestly, yeah, it's just like that. And that's what I'm saying. Like, I have a client, I'm actually going to switch over to my computer here for a second, but I was going to say, I have a client who literally told his investors he was going to give them 1% on their money. 1%. Now you go, and they invested. Why did they invest? It's because he told them an amazing story that impacted their lives. And so they didn't care how much money they were going to make. They wanted to be a part of the story. Now, that's not always going to be the case. You're not always going to be able to tell such a compelling story that people are going to want to be part of it. But the fact of the matter is that he was able to do that. And he didn't hit them with the return on investment until he finished telling that story. Because if he started with, I'm going to pay you 1% on your money, people would have just left the room. They wouldn't even sat there and listened. Right. So, that's what it is. I'm coming in.
All right. There you are. Hey.
Yay. Oh my gosh. Was I showing his lines the entire time?
Yep. Mm-hmm.
Oh my God. Because I just saw it when I walked in here. I'm so sorry, guys, everybody.
Oh, that's okay. No worries. Now we get to see you. Hey.
Oh, yay. I finally got technology to be on my side. So keep going, Mitsan. This is so much fun.
So telling a compelling story, over-promise and under-deliver. No, what is it? Over-promise and under-deliver and over-promise. Gotta get those right.
I think we want to go the other way around on that
one. Right. Under-promise and over-deliver. There we go. Hey, Wisdom.
I'm sorry, guys. I could see myself.
And you know what? As long as people can hear the nuggets that you were sharing with us, that they can take home and they can make it happen, that's awesome.
Do you want to know what's so funny, Nitsan? Right before I got on this podcast too, I told my husband, I've got to be on time for this podcast. This gentleman had followed up with me multiple times, made sure I had the link. I literally made this big speech to him on how I have to be on time and prepared to go. And then it still went to hell in a handbasket. So again, guys, progress, not perfection. Right? I am the embodiment of that.
And that's great. And, taking that into business, any business, real estate, multifamily, whatever shit's going to go sideways every once in a while. Right. Mm-hmm. It's how we react when it goes sideways, when the market crashes, when you've got a mass eviction or a mass exit on your property. It's how we react to scenarios and to the curveballs that life throws at us will determine how far we get in life. Right.
Mm-hmm. That's exactly right. Exactly right.
We still made it happen. We saw some squiggly lines. Who cares? I can hear you. You can hear me. Perfect. Let's continue. That's, the most important thing is we can hear and get all that knowledge from you and learn from you. So, I'm grateful that you're here today. And by the way, speaking of grateful, how was your Thanksgiving?
Oh, it was wonderful. It was very small this year. We usually do these big, huge celebrations, but, COVID. So we only had, about 10 people at the house, but it was wonderful. I did burn the stuffing. Not really proud of that. Again, progress, not perfection.
80%, right? The turkey was good. The stuffing.
80% of the food was good at Thanksgiving.
That's fantastic. That's great.
How about you, Nitsan? What did you guys do? You're in Florida, right?
Yes. So my mother and brother live in Miami, so they came up. We celebrated my mother's 86th birthday as well. So that was nice. It was amazing because 2 years ago at that time, she was in the hospital pretty much on her deathbed. She was asking us to pull the plug at that time. Things were really, really bad. She was in the hospital for about 2 months. And then just like that, everything cleared up. Everything went away. Now she's back at home and she's, still giving me shit and taking numbers and, doing what she does. And it was amazing that she was able to pull out of it. People from that generation, she's a Holocaust survivor.
Oh my goodness.
When she was a kid.
Moly.
So she went through a lot in her life. She was one of the first female ambulance drivers and taxi cab drivers in Israel. So she's broken through a lot of the stereotypes and had a lot of shit happen to her. So she's going to outlive all of us. She's got 15 or 16 grandchildren and I think 7 or 8 great grandkids right now.
Has anybody sat down to interview her? Interview her?
I've been meaning to do that for the longest time. And I think I'm just going to hire somebody to go and sit with her and write down her story.
Dude, I'll do it. That sounds fascinating. I really will.
Let's do it.
I'll come down. But I mean, wow. Yeah. Don't wait either. She's 86. By God.
Right? She's 86, and she's at a point now where she's starting to give all of her belongings away to her grandkids and her children. Here, you
Oh,
take this, and we're like, come on, but you're not going to die tomorrow. It's like give it a break. So
yeah, yeah,
she's
yeah,
funny
yeah.
that way.
No, you
She
got to
got
get
she
on
got a
top
little
of that
buzz.
though. Those are huge stories.
Oh yeah. She's got a lot of stories to tell from, when the Germans came into Romania when she was 7 years old, and how she had to pretend and do all these things. So yeah, she's got amazing stories, amazing stories.
Wow. Oh my
Mhm.
goodness. So when did she get to okay, I know I'm not supposed to be interviewing you, but when did she get to the United States?
1969. She was
Oh, so she
30.
stayed in Europe for a while. It wasn't like
Well,
she fled here.
when she was 7 years old, they left Europe and they went to Israel.
Oh, I see. Okay,
So
okay.
she lived in
Okay.
Israel, and that was the thing. She was in Israel in 1942, before Israel actually got its independence.
Oh,
So
wow.
she was
Okay.
in there with the British Mandate and the Arab League and all that stuff, and Jews were coming in from Europe, and they were coming to Israel, and they were building up Israel and the different settlements and so forth. So she tells a story where she's got 3 kids, and she's walking with a stroller of 3 kids up the mountain, coming back, and there was no refrigerators. They had ice boxes.
Oh,
A box,
wow.
and put the dry ice under it, and
Yeah.
doing laundry by hand. And at 8 o'clock at night, the electricity in the village would go off, and everything would go back on candles, all that kind of stuff. And she tells stories of, look at what we're doing today, right? You're in California, I'm in Boca, right?
Yeah.
And we're doing this live on this technology and whatnot, instantaneous. She tells when her village in Israel, they would gather at like 5, 6 o'clock in the evening, the entire village around one radio, and they would listen to Orson Welles tell stories of like War of the Worlds and things of that, just listening. That was then.
Yeah.
And she tells of how they came up with these things of this machine that would take people underwater for days on end, submarines. This was before submarines came out, and all these different stories. And here she is today, texting us and sending us photos on her iPhone and whatnot. So it's amazing for her to see the growth in technology, and how society has grown and changed and done so much. So it's incredible.
Let me ask you a couple questions. Okay, so this is interesting to me because you said something really fascinating about just listening, and I can do like an audible, but I have to really super focus on audible. Like I have to crazy laser focus. I can't be doing anything else, because if I
Mhm.
am, it's just my
Right.
mind wanders off or
It's
whatever.
just noise.
Yeah. Like, do you find that you have that same issue? Like, do you find that I find that fascinating? Like they gathered around the radio because I can't, it's
Mhm.
impossible for me at this point. I'm lucky I can get through one TikTok that's a minute long.
Right, exactly. 15 seconds, you're just like, all right, next,
Yeah,
next,
just
next.
scrolling.
No, but I'm like that. I'm the same way. I'll listen, while I'm driving, and I'll put the Audible on, and I'll have to rewind it like 17
Me
times, because
too.
I'm like,
Okay.
shit, what did he just say? All right, all right. And then
It
again
sounded
and
like
again.
that was really important.
Hmm. Yeah. And it takes me forever to listen to a book that I
Yeah.
really want to, not one of these novels or whatever that's not
No.
important, but something that's talking about systems and processes and doing this and then. I'm like, wait, I just missed that shit. All right, go back to the last hour,
No,
because
that was like I'm doing Blue Ocean Strategy right now on
yep.
Audible.
Hmm.
And I'm like, I still don't know what a Blue Ocean Strategy is. I gotta rewind it.
It's a great book. I read it twice. It's a great
Did
book.
you really?
Yeah.
Okay, all right. I'm
Yeah.
that you've motivated me to continue on, march on.
Yeah, absolutely. So that's great. Yeah, we have so much to learn from the older generation, and I see my kids today with their phones and whatnot. And my 13-year-old, every 5 seconds she's picking up the phone and tweeting and texting and snapping, and I'm like, just put the phone down for 5 minutes. What's going to happen to you when you're 18, 20, 25 years old, and you've gone the last 10 years with this thing in your hand, and you can't be separated from it? How are you going to think on your own? How are you going
Right.
to problem solve? How are you going to imagine your future and create what you want? It's very troubling to see what technology is doing to the youth.
It is. And also, but I also say this because, I have 3 kids, and my 6-year-old knows how to use a computer better than my husband does. Right.
Mm-hmm.
What bothers me is exactly what you said. There's no problem solving like that they have to do. But I will say this. One thing I don't want for my kids, a lot of my problem solving skills came from having to actually solve problems because my parents refused to solve those problems for me. I don't want to get into like my own personal trials and tribulations, but my kids are simply not going to have those problems.
Right.
They're not, and your kids are not going to have those problems.
Mm-hmm.
They're not going to have to figure out how to take the city bus so they can work their waitressing job in the middle of the city, right? Or whatever trials and tribulations you dealt with. They're simply not. They're going to get a ride. I'm going to give them a ride.
Exactly. I saw there's a video on TikTok actually where he goes, my dad. He goes, my grandfather walked to school. My dad rode a horse to school. I drove a car. My kids are going to drive Mercedes, and their kids are going to walk to school.
Yeah.
Because he goes, hard times build strong men. Strong men make, or women, men and women, right? Create easy times. Easy times create weak people.
Yeah, it's totally true. I know exactly what you're talking about. That is such wise and sage advice. And one of the things I'm doing, we're totally veered off topic, but it's important because I feel like the work we do is for our kids, right? And raising capital is about building generational wealth. I talk about why you need to raise capital so you can build generational wealth, not just for your kids, but for your investors' kids. And if you don't have kids, you certainly don't have to have kids to be building generational wealth. You go, well, what do you mean by that? Because you can be building generational wealth for someone in your community. You can't spend it all, right? If you're looking to make money just for yourself, that's an empty life. You'll never achieve anything. You're raising capital and you're building a great big business. Yes. So you can have a wonderful life, but also so you can provide for the lives around you, whatever that means to you, whether it's your own kids or somebody else's kids. The thing is like, and this is something I struggle with. I'm going to raise I'm not raising capital necessarily, but I advise people on how to raise capital, build yourselves up to generational wealth. So not so kids can drive Mercedes, but so they can be artists or humanitarians or be in the Peace Corps and not have to worry about where their next meal is going to come from, or whether or not they can get a hot shower, or they have to live in their car. That's why we do it. And one of the things I'm doing right now is I actually just bought a foreclosure property in Puerto Rico, and we're moving to Puerto Rico. And I'm going to make those kids learn another language. I'm going to make them learn another culture, and they're going to learn why it's important. We're moving to a part of Puerto Rico that focuses on environmental concerns, and they're going to learn why they need to take care of the environment. And I think that's my little contribution to trying to make their lives a little more difficult.
Right? They got to have some struggle.
Right. Or they have to at least empathize with the struggle around them enough to take action, right? Maybe they don't have to personally struggle, but they have to empathize with those who are struggling around them.
Right. Absolutely. Absolutely. So tell us more about this foreclosure. Are you moving to Puerto Rico for the tax benefits?
Well, that is one of the motivations. I'm not going to lie. That probably initially started the motivation, and then it became more of like an adventure and a hunt. My husband told me, if you can't find a decent place for us to live, I'm not doing this. And I was like, okay. And I found most of the properties in Puerto Rico are listed on a website that looks like Craigslist. Okay. It's literally, it's the Craigslist of Puerto Rico. Puerto Rico has Craigslist, but this one website is called Classificados. If you go on it, you're not going to believe it, because it's literally has not been updated since probably the year 2000.
Oh, wow.
And 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 so I was on there and I was looking through properties and I noticed this one property had terrible pictures. This is how I've actually found 3 deals in my lifetime using this strategy. 3 of the best deals I ever did. Oh no, actually 4. 4 of the best deals I've ever done I found using this very strategy. You just look on the normal places that you would look for a property, and then you look for the worst pictures you can find, the absolute worst pictures you can find. You find those listings that have pictures that were taken terribly, or there are not a lot of pictures, because you know there's something fundamentally wrong with that property to the point where they couldn't even care enough to take good pictures. And that was this property. They had a picture and it was clear that the pool was green. It was a weird angle. It was like almost like they were taking a picture of the ground instead of like an actual picture of the house. And then all of the lights were off in the house when they took picture, like the listing pictures were the lights were all off. So the electricity wasn't on. Yeah. So I'm like, why would anybody take pictures of a house this expensive? In the ad, they said this house is appraising for 1.4 and they listed it for $1 million. Oh, wow. And I was like, there's just something wrong. It also said that it was off market, like that it already sold. It was under contract. But I noticed that it'd been there for like a month. And I'm like, that doesn't make sense either. So I called the broker as if he owed me money. Like I just called him relentlessly. I texted him relentlessly. I emailed him relentlessly. I got another broker in Puerto Rico to call and text him for me. The guy told the other broker, it's not available. Somebody's already bought it. It's under contract. I said, I just don't believe it. Finally, I threw a Hail Mary pass on a Saturday. I sent him an email saying, I'm looking at this property. I know you keep saying it's not available, but it's been listed now for 3 months and it keeps saying that it's under contract. It should have already closed. If it doesn't close, then I want you to call me first. On Monday, he wrote me and said, actually, it just fell out of escrow on Friday.
That's beautiful.
I know. And then the wheels just moved from there. And then I got him to tell me a story. I told him a story back. You can use the story method, guys, for raising capital. You want to find out what your investor's story is, and then you want to speak your story to your investor so that you can relate to them, whatever it might be. But I found out their story. I told him my story. I asked him, what does the bank, he revealed to me that this property's been foreclosed on. No one's ever made a payment on it for 11 years. It's been abandoned for 2 years. He goes, so yeah, the bank needs to get it off their books. He started giving me even more information. The bank's in a lot of trouble. They need to get this property off their books. I said, well, what do they need? This is a key word and this is also key for dealing with investors, right? You want to ask the investors what they need, not what they want. And then you want to speak to what they need, not what they want, because they think they want one thing, but they really need another thing, right? So somebody could say to you, I'll put this in this context and I'll get back to the story. Somebody could say to you, I want 20% return on investment, but that doesn't mean anything. Do they want 20% return on investment on sale? What do they want? So what are you looking for? Well, actually, I want to make sure I cover these expenses every month. Okay. So you want cash flow. And the cash flow you want really equals 10% cash on cash return. So yes, we can do that by doing XYZ, whatever it is, right? So you want to find out what they need, not what they want, because what they want is irrelevant.
Right.
And it was the same with the bank. What they wanted was irrelevant. What they needed was another story. They needed the property off of their books. They needed someone who could perform, who could actually purchase the property. So he says they want $1 million. And I said, that doesn't answer my question. What do they need? He goes, 875.
Okay.
And he goes, that's what it's mortgaged for. And I go, okay. I offer 880. I just offered $5,000 more than what it was mortgaged for 11 years ago.
Wow.
Mortgaged for 11 years ago. so they could get it off their books. They come back to me and go, not only are we going to sell you the house, we'll finance it for you 90% of the purchase, 90% of the purchase price. I got them to finance it 90% of the purchase price. And I got for an under, and then we got a new appraisal on it, and it came back at like $2.5 million after repair value. Yeah. So guys, ladies, gentlemen, at the end of the day, you need to ask questions, tell a story, and then, you know, and find out what people need, and then get them what they need. Because they can live with what they want, but they cannot live without what they need. So, and you want to be fair. You never look to rip off anybody, never look to take advantage of everybody. You always want to be fair, play fair. Even if it hurts you a little bit, you always want to be fair, because at the end of the day, it's not about how much money we can make. It's about how we lived our lives, and can we die happy? Can we die knowing we did the right thing? So and a bank is just a bank, right? It's an entity. It's not a person. But I wasn't even looking to rip off a bank. I was looking to get them what they need, so they would get me what I want.
That's right. There you go. That's perfect. That is perfect. That's an incredible story.
Thanks. Right. And it's all about the story.
It is. And you know, just shifting quickly about multifamily. When I go out and you know, brokers send me a property or it's an off-market deal or whatnot, the first question I ask them is, what's the story here?
Yeah.
What's the story? Is it just some dude or a group that, you know what, they made $1 million and now they want to sell it and make another $1 million? Okay, it's not a compelling story.
No.
Right? Like, I remember the first multifamily that my partner Laura and we did was a 27-unit property in Leesburg, Florida. Now we're north of Orlando. Never heard of Leesburg before in my life. We went there, but the story was compelling. The woman is about 75 years old. Her husband died. He ran the property. Her attorney and her property manager are stealing her blind. They didn't do any renovations to the property. Upon sale, the subsidies on the property they were going to be removed. So the property was going to lose its subsidy. So it had a great story for us to come in and to help all the residents that were there, which were old Vietnam veterans and old war veterans and people that were sick and you know, just elderly people. So that story was compelling for us, so that we can go and help the woman, the owner, stop losing money, right? And keep the people in their homes, because once the subsidy was gone, they would have to move out, and they couldn't afford to move out. They couldn't afford to do anything. So that was a very compelling story for us on why there was great upside for us and how we could help the people stay in their homes and continue living without disrupting their lives.
Right. And that, I mean, I love stories like that. I love those circumstances where you're doing right by someone or a community or some cause, and then you can see the money through that lens, right? You don't even need to talk about how much the return was. I can see the money. I can see where the value is. We're going to get out these people. We're taking advantage. There is upside potential. There's rehab opportunity. You know, I'm having like a really hard time these days with these multifamily investors who are saying so much upside potential, and then they show me a newly rehabbed building. It's like, no. You mentioned Grant Cardone, who I represented for quite a few years, and you know, it was funny because I never subscribed to his brand of marketing or anything about him prior to working with him. When I started working with him, and especially not so much him, but his team, and really saw what they did and why they do what they do, it made a lot of sense why they had a ton of followers, because he'll straight out tell you, no, I'm buying brand new properties. I'm buying brand new properties that are beautiful properties, that places where people want to live a particular lifestyle, and I'm going to run them very, very well. And that's the story. You know, it's not about helping a community. It's about providing like buying the best property that's out there, that's already done. There is no value add. He'll never tell you he's doing value add.
Right.
and that's okay too. You don't
Mhm.
always have to tell, but don't try to like, it's like what Judge Judy used to say, don't pee on my red leg and tell me it's raining. When you're rehabbing a property and there's nothing to rehab. At
Right.
least be honest about what you're doing.
And true, it's like Trump, right? Trump
Yeah.
said, "Look, I'm going to go out there, and I'm not going to take an old crappy building and make it nice. I'm going to tear it down, and then I'm going to put luxury. I'm going to make it a place where people of the highest, financial status
Yeah.
will want to live and will be
Right.
happy
Right.
to pay ridiculous amounts of money because of the service, because of the quality, right? But it's still a story."
You're in Boca. So do you
Mhm.
know Frank McKinney?
Yes.
He's a perfect example of that kind of
Mhm.
story.
Mhm. Mhm.
He loves to play Robin Hood. He
Yep.
builds beautiful luxury mansions so he can give money to the poor in Haiti. I
Right.
mean, like, you just have to look for the story in your own situation.
Mhm.
Don't start with the returns. Don't try to, wedge in a story because you think it's the story people want to hear. Tell the actual story.
Right. Right. No, absolutely. Absolutely. It's all about the story, right? And like you said, don't, especially when you're going after, savvy investors, right? People
Mhm.
who've owned businesses, they have multi-million-dollar corporations and companies, and they've done business and whatnot. They can smell bullshit a mile away, you
So
know?
true.
And you know me, right? I'm this New Yorker kid, whatever. I call it the way it is, right? People can smell bullshit a mile away. It's funny
No,
when,
who's kidding?
my wife is an artist. She painted Yoda for me back there. So whenever we go to these different art galleries, and you see these people walking around, oh, I love that painting, and the struggle in the artist is apparent in the lines and so we walk up to the galleries, and I'm like, do you smell it? Do you smell it? She goes, what are you smelling? I go, the bullshit. You can smell the bullshit from out here. It's already starting, right? So people can smell bullshit from a mile away. And if you
Yeah.
try to bullshit them with your investments and what you're trying to do and all that stuff, it's going to come back at you. You're going to be known in the industry as a bullshitter, as a bullshit artist, and you're not going to be able to raise capital. You're not going to be able to do anything because you've got that stigma attached to you,
Right.
right?
Exactly.
Now,
Exactly.
look, we've had a lot of fun here. We've got 8 minutes, and I want to just talk one or two more things about actual capital raising. Is that
I
cool?
know, sorry. We went on a total trajectory, but at the end of the day, this is it's all the same stuff. You need to tell a great story to your investors. Oh, and by the way, I will say this too. You got to back up with the story you're telling. It's got to be a true story,
Hmm.
and you have to perform. If
Right.
you don't provide a before, during, and after investor experience that is second to none,
Hmm.
then you might as well just put yourself in jail or,
Right. No,
or sue
absolutely.
yourself. One,
Hmm.
because that's what's going
Right.
to happen.
And sometimes your business plan, your business model goes sideways.
Right.
We just went through an entire year and a half of a pandemic, of a shutdown, where, hey, tenants don't have to pay, but you, the landlord, you got to continue paying your mortgage. So you got to figure that
Absolutely.
out,
Yeah.
right? I mean,
Yeah.
Lord knows. I don't know if you can see it. This used to be all black and whatnot. I used to have no gray, but I didn't sleep at all last year because of the situations that we were in.
That was a
I had
lot of people. Yeah. And
right.
you have to communicate with your investors, and communicating with your investors is the way to go.
Right. And if you're open and you're straight up and you're honest with the investors, people will understand because everybody was going through it, right?
Right. Right.
And I told my investors as soon as the shutdown happened, I said, listen, the way I'm protecting you and your money is by protecting the property and the income. So
Right.
we're not going to do distributions for X, Y, Z amount of time until we're able to understand where we're going. But and that's for us to protect. I don't want to drain the accounts and then not have any money because, who knows who's going to pay or whatnot. But I find that as long as you're completely transparent with your investors, tell them the good, the bad, and the ugly, then they're understanding. As,
Right.
as long as you're open and honest with them, right? And you're forward thinking and you just lay it all out. They're
Well,
pretty understanding.
this actually, you speak to another great point, actually, which is that if you are, if you vet your investors beforehand and you make sure that your investors are proper for your deal, because you're going into a business relationship. They're bringing money. You're bringing time and energy and effort and knowledge, which quite frankly way outweighs that money. You can get money anywhere. You can't get all of these things necessarily anywhere, right? You can't get great deals necessarily anywhere. There's deals out there, but you can't always get the greatest deal with the greatest operator, with the, you know, with the most knowledge and the systems and the processes that will work, right? So this is valuable. And I think what people lose sight of is they see the money and they weight it equally. It's not the same. So when you're vetting your investors, you need to make sure that when those tough times come and you communicate, hey, we're having a tough time, they're not going to become these, you know, narcissistic jerks that just make your life miserable and threaten to sue you and try to, you really need to make sure that that money that you're getting from that investor is worth that trade-off.
That's right.
And so that when you do come with that messaging, and you better come with that messaging of, hey, we're having a tough time and here's what's going to happen next, or here's what we're planning to do next, that they will go, okay, I understand. I get it. Because if you don't do that step way back in the day when you're in your honeymoon relationship, you're going to have a really bad time when you're giving them bad news.
Absolutely. Absolutely.
And all of you are going to give your investors bad news at some point in time. You will not have been in the business long enough if that does not happen. That will happen to you at some point, at some time in your real estate investing career.
Right. Yep. Absolutely. If you're in it long enough, it's going to happen. It's just part of the game. It's part of the game. You got to be prepared for it. There's going to be mistakes. There's going to be loss of money in some place here and there. Our job is to mitigate all that risk and all that loss as best as we can, like you said, with our knowledge, our experience, our effort, our work ethic, and our transparency.
Correct. Yeah.
All right. So we got 3 minutes. What are some things that newbies should really look at when they're raising capital?
Okay. So to me, there are 7. To me, I teach about building a machine. I call it my particular brand is Rockstar Money Machine. You need to build a machine. So in that machine, to me, there are 7 pillars, and of those 7 pillars, there's 21 steps. Every single step's important. When you're thinking this isn't that important, you're wrong. It's important. Just like the steering wheel to a car, the car will not run if it does not have that steering wheel. You need all 4 tires, you need the transmission, you need the steering wheel. You know, maybe you can drive the car okay if you don't have the rear view mirror, right? And I equate that rear view mirror to say like investor, gifts. Like that's about it. Everything else you need to do, you need to have your corporate structure right. You need to make sure that you work out the numbers so that you're making them a proper return. You're not just telling them what they want to hear or what you think they want to hear. You need all of it together. Go in with eyes wide open. Get yourself, I'm not practicing securities law anymore, but my old law firm still exists and is amazing. And get yourself a great securities attorney. I used to work for crowdfunding lawyers. Now I just do advisory on raising capital. But get that going and make sure you make the before, during, and after investing process for your investors completely seem like a dream, like they're walking in the Disneyland of investing. That's what you want to make the experience like. So they just have to ask their financial advisor, their CPA, or their attorney, should I do this? And they go, yeah, you should do this. They sent it to you this way. They did this. They checked all the boxes. They got a experienced securities attorney. They filed all the right paperwork. They gave you all the right information, and they're providing it to you in a format that's easy to understand and put together. Make it easy for you. Make it easy for your investors, and you'll be okay.
Awesome. Jillian, thank you so much for being here. I'm definitely going to have you back on the show because there's so much more for us to talk about.
I would love to. This is so fun. And next time I won't have like lines across my face.
That's awesome. Why don't you tell our listeners how they can reach you to get some consulting for capital raising?
Oh, sure. Absolutely. You guys all go to privatemoneyrockstar.com. You can check me out there. And also feel free to friend me on Facebook. I am happy to chat with you on Facebook.
Awesome. Jillian, thank you so much for taking time out of your busy schedule.
This was so much fun. Thanks a bunch.
Thank you. And I'm going to hit you up to, go interview my mom and write her story down.
I would love to do that. I'm not even joking. Woman and I will get we'll get 5 hours on a Zoom call. I'll get it all out.
Awesome.
Because
Awesome.
I'll just keep asking her questions until I get all the answers.
And you will get a kick out of her. She is a feisty, fiery woman. She's 86 years old and she still gives me shit.
I love it. I love it. No, I'm definitely going to take you up on that. Nitsan, thank you so much for having me.
Thank you, Jillian. Travelers, it was awesome having you here as well. Thanks for being on the show. Stay tuned next week where we're going to have an awesome multifamily syndicator who's doing tons of deals. And we're going to talk to him about how he's doing it and what he's looking and how he's raising capital as well. Jillian, thanks again for being on the show. And you can watch us and listen to previous shows on all these different broadcasting podcast stations on Spotify, Apple Podcasts, iHeart, YouTube, all these different places. Check us out. Go to YouTube, to the Traveling Investor YouTube page, subscribe, like it as well. And go to Etsy.com and look for the Traveling Investor store and get some Traveling Investor swag for the holidays. All right. And by the way, whenever you buy something from our Etsy store, 10% of the profits goes to different organizations that help with sex trafficking and child trafficking. So go in there and let's make a difference together. I'm Nitsan Mosery, the Traveling Investor. This has been another session of the Traveling Investor live Q&A. I look forward to seeing you guys next week somewhere on Spaceship Earth. Take care. Be well.